Right, so our company loves volatility. So the busier it is, a little chaos, a little excitement, that creates volume.
So I want to say that this is allegedly, of course, nothing has been confirmed, but Howard Lutnik used to be the chairman and CEO of the company before he became the Secretary of Commerce for the United States in early 2025. And there's public disclosures that show when he entered government service, he divested, meaning sold off his holdings and transferred control of Cantor and its managers to his family trusts.
Howard Lutnik passing the torch to a new generation. After his confirmation as Commerce Secretary, Lutnik named his 2 eldest sons and 3 company deputies to run the core of Cantor Fitzgerald's businesses. Brandon, who is 27, is now CEO and chairman, while DJ Kyle Lutnik is executive vice chairman of the parent company.
Now, why would he do that? Well, because when you hold a powerful government position, you're not supposed to have a conflict of interest because it gives you an unfair informational advantage. AKA, you know things before the public does, so you gotta not be profiting from that, right? So on the surface, it looks like there's no beneficial ownership, right? No insider trading happening. That's the official story. However, Cantor Fitzgerald is still a major financial institution. And according to some reports, Cantor Fitzgerald allegedly started buying the rights to potential refund claims at approximately 20 to 30 cents on the dollar. And it stands to make a lot of money. Now, if the US courts rule that the tariffs were illegal and refunds are issued at 100% of the claim value, that claim pays out in full. That means in theory, Cantor can make as much as 2 to 5x returns on those claims. Again, this kind of thing happens all the time, but where it gets interesting is that Howard Lutnik was reportedly involved in advising the president on this tariff policy, right? He's part of the sovereign player system, at the same time that the company that used to be his and whose control was transferred to his family trusts has also allegedly positioned itself around potentially profiting from all of this. Now, even if all the legal requirements are met, it obviously doesn't look good, and it can show how a player can move between sovereign interests, aka the interests of a country, to personal financial interests in a way that's obviously a conflict of interest. Now, I just want to say that this is not accusing anyone of wrongdoing. This is just an example of how the people closest to power are usually the ones to benefit first and to benefit the most. That's called the Cantillon Effect. But here's where it gets so much more interesting. All right, so before we get further into it though, I want to quickly mention that SoFi is giving away $100,000 in Bitcoin each week through March 31st, 2026. Here's the details. A lot of people watching this are trying to figure out how to buy, sell, and hold crypto without jumping through a bunch of hoops or worrying about sketchy platforms. And that's where SoFi comes in. SoFi Crypto is back, and what's interesting is that they're the first national chartered bank where retail customers can buy, sell, and hold over 25 cryptocurrencies. That means you can access assets like Bitcoin, Ethereum, and Solana on a federally regulated platform with the safeguards of a bank all inside the same app as your checking, savings, and investing. Everything in one place. Now, obviously, crypto is inherently risky, and you need to make sure it's right for your financial situation. But if you're someone who wants exposure to crypto within a platform that operates under a national bank charter, that's a big deal. And right now, SoFi is giving away $100,000 in Bitcoin each week through March 31st, 2026. You can open an account using my link down below to claim your share. I'll also have the link at the top of the description of this video, so it's easy to find as well. Thank you, SoFi, for sponsoring this segment of the video, and now let's get back to it. So now let me tie all of this together. The tariffs are a symptom, but they are not the whole story. Cantor Fitzgerald and Howard Lutnik, that is not the story. The real story is that we're watching the fourth turning in real time. The United States, for the last 40 years, has been running an economic model that's now breaking, right? What was the model? The model was the US exported dollars, it got rid of manufacturing, the US financialized everything. Everything was expressed by paper money. That made Wall Street very powerful. That made asset prices explode, right? Stock markets went up, which made people really rich. The dollar stayed strong because it was backed by the military-industrial complex, and that system worked really well for the financial industrial complex, but it did not work as well for domestic manufacturing or labor, the middle class. And now, the United States is trying to do something that is almost impossible to do, which is to reverse its economy from financialization to industrialization, right? From paper things to actual real things. Why is it trying to do that? It's because on a sovereign level, another sovereign is now winning the game. China is now ahead because for decades, China used their trade surpluses to do what? To build a military, to build their infrastructure, to create partnerships with other countries, to create the BRICS, right? To create alternative payment systems using real hard money based on commodities like gold, which means the global rules-based order, where the US was the top dog thanks to its military, is over. Hold on, why is it over? Well, because if you offshore industries and another sovereign power now makes a lot of your military thanks to components you don't have, then you lose the leverage. You don't get to make the rules anymore. That's why we're seeing all these changes.
The Ukraine war showed us we got outproduced by the Russians badly. We couldn't produce shells. We couldn't produce Stinger missiles. We were reliant on essentially China to supply our industrial base, to supply our defense base. We've been borrowing money from China to build weapons to face down China using Chinese components. It's not a good strategy when your biggest geopolitical adversary is China.
All of this creates uncertainty, right? And that's what we're seeing in the markets. That's volatility, especially in markets that are supposed to be stable in times like this, which is gold. Now, those who have access to all of this information of where it might go next, right, they're able to front run the volatility and they can make money from it. Now, historically, when empires go through trade imbalances and rising debt, they've got three options to try to fix it. Option one is something economists call austerity. That means the government spends less or taxes people more. But because they will never be reelected, politicians never pick option number one. Option two is something called fiscal dominance. That's when the government has so much debt, like we do, that the central banks cannot raise interest rates too much without causing serious problems, right? If rates go too high, the government's interest payments explode and the financial system can get unstable. Banks start breaking, which we've seen. So instead, rates stay lower than they otherwise might be, inflation might run a little hotter, and over time, that inflation slowly makes the debt easier to pay back over time because the dollars used to pay it back with are worth less. Well, then there's option three, which is to devalue the dollar. And this is where Luke Grauman's theory becomes really interesting because by weakening the dollar, that makes US exports more competitive. It lowers the real value of debt. And historically, when there's a major transition like the one we're going through right now, governments have raised the price of gold to increase the value of their reserves. If you revalue gold and mark to market it, the US could easily pay for its deficits.
If you revalue gold enough to basically recollateralize or effectively buy down your debt so that you have low debt levels, then you can make more dramatic changes to the economic system and its connections without running the risk of blowing up the financial system, right?
That doesn't mean it's going to happen tomorrow, but it's a possibility that something like that could happen in the future. Now, here's where tariffs sort of play into all of this. If the United States is trying to reverse 40 years of financialization and rebuild domestic industry, it can't just be like, all right, guys, so now we're going to weaken the dollar because the dollar is the main source of power. It's the source of global leverage. It can't easily choose number one because austerity means cutting spending and right? In a fragile economy where people are already struggling, that is very politically bad. And people will not vote for that. Option two is something on the table. Fiscal dominance is something that happens gradually, right? But it's not something we necessarily announce. And then there's another option, which is to weaken the dollar. And tariffs are sort of a way to rebalance trade without directly touching the dollar. Because tariffs can protect domestic industry without admitting the dollar needs to get weaker. Right? So the US has to walk this very fine line between being the world's reserve currency, aka having a strong dollar, and being globally competitive on trade, which is almost impossible to do. It's really hard to have both. It's what economists call it as the curse of the world's reserve currency, right? Because if you have a strong currency, that is your country's product. And if you make stuff while your money's strong, well, no one wants to buy your stuff because then it's too expensive. So what do? You stop making stuff. You just make dollars. And after decades and decades of outsourcing everything, including parts of your military to your adversaries, guess what happens? If no one wants your dollars then, because you threaten the world to take them away from time to time, but you can't use your military to enforce it because your military depends on your competitor making a lot of equipment for you, then you got to start making stuff again. But hold on, why then is Congress blocking the president from using tariffs? Aren't they both supposed to be on the same side, representing the sovereign and the interests of the United States? They're supposed to, but the reality is the sovereign is not a unified force. Congress is made of people that don't represent America in the abstract. They represent a lot of things, like districts, industries, donors, employers, in some cases, other nations' interests. If you sell off your nation to other interests, if it's for sale, this is what happens, right? Tariffs help U.S. sovereign interests, like domestic manufacturers, but they can hurt potentially more powerful interests, like transnational corporations, retailers, exporters, right? Investors, aka the financial industrial complex, which transcends your nation's interests.
They're very unpatriotic and disloyal to our Constitution. It's my opinion that the court has been swayed by foreign interests and a political movement that is far smaller than people would ever think.
You have forces within your own nation that can go against what your nation needs. So maybe tariffs get blocked, maybe they don't. We don't know. Those who do know will make some money. Whether it's because they bought the right to refunds, or that may or may not come, or because they know that their policies can create volatility. And volatility creates opportunities to make a lot of money. That's how it works. That is power.